Hi everyone, welcome to the Trading Battle sponsored by ACAP. I hope you're prepared for an exciting live session as we've invited two very successful yet very different traders to participate in this high energy, high stakes battle. Over the next 45 minutes, you'll see firsthand how these pros make money in a live market environment against all odds. Today is Juneteenth, a new American holiday celebrating the emancipation of those who have been enslaved in the U.S. U.S. markets are open, but there's no data and participation is lower than usual. It may not be the best trading environment for our traders, but it is the best opportunity for us to see how they trade when the odds are stacked against them. In one corner, we have Phillip Konchar, who has been investing since 1996 and margin trading since 2004. In the other corner, we have Chris Guzman, who has been trading since 2010 and went pro 1 year later. These two traders couldn't be any more different. Phillip mainly trades equity index and commodity futures and incorporates big picture fundamentals into every single trade. Chris, on the other hand, only trades Forex and fundamentals doesn't matter to him at all. In today's session, there will be 3 trading challenges. And to make our viewing exciting and their lives more difficult, they will be put into a position blindly by the other trader. The stakes are high, and not only are they trading for bragging rights and internet fame, but they're also trading for their charity of their choice. At the end of this live stream, we'll compare their trades, the market movements, and declare the ultimate winner. For our viewers at home, if you have a question for any of the traders, please write them in on this chat box and we'll pass it to them. So now let's get started. Thank you, Phillip, for coming on. It is the start of the New York Open. Phillip, how are the markets moving and what trades are you looking to kick off with?
Well, we are seeing a fairly substantial pullback in U.S. equities at the moment. So indices are moving lower. I mean, yesterday, initially after that Fed press release and surprise tapering talk, we had the US dollar strengthen, and that caused equity indices to pull back lower, equities in particular to pull back lower, and impacted commodities as well, like gold in particular. So what I'm seeing at the moment, I'm seeing continuation of that move lower. There was a fairly straightforward push higher in technology stocks. So Nasdaq made a new all-time high, and we are currently seeing a Nasdaq pulling back off those highs. But S&P and Dow Jones didn't follow. S&P and Dow Jones stayed lower. So what I'm looking at the moment is I'm looking for continuation to the downside after initial retest of yesterday's closing levels. So we are a little bit lower than where we kind of closed yesterday. I wouldn't be surprised to see possibly an oversold rally sometime during this afternoon, retest of those levels, and then continuation to the downside if this sentiment doesn't change. And you also mentioned before the actual event, we have it was supposed to be a quadruple witching day, but it's actually a triple witching day as well today, and that could add another element of volatility in the markets, which are probably trading with a low liquidity. So that's me.
Good stuff. Can you get a little bit more specific and let us know which instrument that you are looking to get into, along with the stops and limits?
Yeah, absolutely. So I'm actually looking to short gold right now. So what I'll do, I don't know if I can do that right now. If you can, are you seeing my screen?
We are now.
You are now? Okay, sorry. As we were speaking, I was waiting for a break to the downside of this little rising wedge. So let me just show you what I mean by that. Gold is correcting quite a lot. It's coming to about 61.8 Fib retracement from this double bottom here to this current swing high at 1916 and so on. So we are seeing a pullback lower. This is oversold market condition, but if I go and check this out from the intraday point of view, I can see that my price action is creating lower highs. The price is trading below multiple moving averages, and in my case, I have 20, 50, and 200. And if I go into an hourly and a 15-minute, this looks like a rising wedge. And this type of patterns, they have the tendency to break to the downside. So they have the tendency to do something like this: dip lower, then possibly a retest. If that happens, that will be a second chance for the entry into this trade, and then take profit down here towards these lows at 1770. For take profit, the current stop should be just above here at 1795. So I'm in this trade at the moment, looking for more downside. From a contrarian point of view, if I see a big reversal down here at this 61.8 and a double retest of this 1760, I would possibly be tempted to buy here for a swing type trade, which could be open for a number of days, possibly even a week. And then in that case, I would be looking for an oversold bounce back towards 1815, 1830, even possibly towards 1840 to the upside. But this is it's a different type of trade at the moment. This is a shorter term live right now.
I've got a number of questions for you, but before I start peppering you with them, I want to give Chris the chance to talk about his ideas and what trade he's looking at right now. So go ahead, Chris.
Absolutely. Thanks so much, Kathy. So I'll start out by talking about the dollar, because as Philip rightly said, the dollar was rallying quite strongly yesterday. We did start to see a bit of a pullback, and I don't know if you can see my screen or not. But if you're looking at my screen, you can see that we did start to see a bit of a pullback. We did have a bit of a dark cloud cover that formed on this 2-hour time frame on the dollar index. Well, it was a dark cloud cover, but as you can see, as of this current candle here, we're completely invalidating that. Okay, and instead, what we're getting is actually a bullish formation. It's a morning star, right? And so that makes me think, right? Okay, dollar strength. And so I'm going to go to all my dollar secondary pairs and think short, right? And so starting with pound dollar, I've actually already gotten in on this trade. My entry here was 1.3864, so just about here, with a stop loss at 139.24, and I've got my take profit at 137.77. Now, in the case of pound dollar, you can see, we've got a nice strong downtrend. There's our weekly and daily pivot point, which has been acting as resistance for as long as the market has stayed below it at 1.4. And so we also have a counter trend line break in here, which, you can see how the market broke and then tested. The test failed, resistance held. And so I see this as a pretty nice sell-off. And because I believe this to be dollar driven, even though, as you say, Kathy, it's Juneteenth in the US now. I still believe this to be dollar driven. And so what that's going to mean is that's going to translate into weakness across the board on the dollar secondary pairs. So as I look at euro dollar, okay, you can see the sell-off starting to occur on euro dollar. If I go over to Aussie dollar, I can almost kind of sort of blindly tell you, right, as we go through the rest of these pairs here in the majors, which way they're going to go based on that analysis on the dollar. And so Aussie dollar, I'm looking at potentially shorting, although I have to see if there's still opportunity to get in there. Kiwi dollar, it looks like there is still some room. In fact, Kiwi dollar actually looks pretty nice. I may look to take that next. And then for my dollar primary pairs, I'm looking to buy. I'm looking to go long, right? Trading dollar strength. And so dollar yen has started to give me a little bit of a setup here. I think we may get a bit of a pullback, so I think I can possibly get a better price. So I'm going to wait. And then dollar CAD. Dollar CAD is hot to trot, man. Look at that. It's already on its way. So I've got to look to see if I can get into dollar CAD. The only other thing I'm looking at the moment is gold. I'm in agreement with Philip. I've actually been short on gold for a little while now. I'm up several hundred pips. And so what we had here was a nice big pullback, which was to be expected based on yesterday's big sell-off. Nice big pullback, but you can see, with this pullback, the market never really made it, or it did make it to the 50% mark of the previous candle, but you can see how resistance is pretty strong there and pushing this down. We're getting that rejection. So I'm in total agreement on gold. And in terms of silver, I'm actually bearish on silver as well. So I'll be looking for a setup. And as a matter of fact, just one last thing, silver on the 2-hour time frame, that is a
Sorry guys, I'm just gonna jump
formation.
in. I'm gonna move my stop at break even. Move my stop at break even, please. Now.
What's your target, Philip?
1770, 1770.
Great. And
This is
Chris,
a short-term scalp. Sorry, guys.
no problem. Chris, you showed us a whole bunch of charts. Where are the levels that you're looking to get in at if you're not already into some of these trades?
Yeah, so I'm already in on pound dollar.
At what price?
I'm at 138.64 with a stop at 139.24 and a take profit at 137.77.
Okay.
Hang tight on the rest of them. I'm not in on anything else just yet, but I'm probably about to set up very shortly.
All right, good stuff. So, one of the questions I have for both of you is that today, we clearly have a sharp sell-off in stock futures. Both of you are in kind of these risk-off trades. But today, it is also the what will be the 10th straight day of declines in the Dow, which is the longest stretch that we've had of decline since March 2017. How much further can that really go without seeing any type of recovery? Because it's a very extended move. Did the Fed announcement, was that so significant that it kind of throws that statistic out of the picture and extends us for 13, 14 days? What do you think, Philip?
Well, to be honest with you, there's a bit of a divergence between Dow and S&P and Nasdaq. Normally, you would see them kind of moving in quite a bit of correlation, but because of the various different things which are happening in the market and driving the market from the macro and fundamental point of view, from the economic data point of view, and what we perceive central banks might do to potentially slow down the overheating economy, and because of the concerns with inflation, I wouldn't be surprised to see a little bit more pullback in Dow Jones towards 33,270, possibly even 33,000 even to the downside. I know we had a kind of 10 days kind of sell-off. S&P is off all-time highs. Dow is definitely away from that magical round number 35,000. And retail traders, they love round numbers because mainstream media, I mean, when you were on kind of reporting, or Boris, when you guys were reporting on CNBC, on Bloomberg, or talking like that, you loved round numbers. And then by the time you said it, it was already too late. And that's when retail traders are coming in and either looking to place orders or get in, maybe take profit, maybe put their stop losses around numbers as well. So 35 to the upside, that's a significant level, but 33 to the downside for Dow. From the intraday point of view, if I can share my screen with you, I don't know, are you seeing that now? Okay, so this is a daily chart of Dow. Dow was uptrending quite nicely. There is no two ways about it. Look, this is an uptrend which is now broken. I don't know if I can zoom in and show you what I mean by that. In my book, as long as the price is creating higher lows and higher highs, and it stays above 20, 50, and 200 period moving averages, that's an uptrend. So therefore, you're looking to buy the dip, or you're looking to buy the breakouts of any kind of consolidation. The fact that we have a first daily candle closing below this trend line, and particularly below these clusters of the lows, if we have a daily candle closing below these lows today, that would likely be seen as very, very bearish going forward for the next week. So from the intraday point of view, this is where we closed yesterday. And normally what happens, normally in a normal environment, when I'm kind of doing my pre-US Open scalps, I would expect at the open or as close to the open, a rally into this area here, which is roughly around 33,770 or thereabout, for a push lower. Because then when you guys come in to your desks, you're seeing this as a big, massive gap from where we closed yesterday and where the price is opening right now. Okay, so the logic would be rally and then a big reversal here and a push lower. And this is based on the multiple layers of evidence, because you would have a falling resistance trend line, you would have a fib here as well, you would have a moving average in a different time frame, and so on and so on. So the premise for today would be either a rally for a shorting opportunity in Dow, or possibly a loss of these current lows, maybe a retest, short-term retest, and then continuation to a downside towards 33,270, possibly even lower towards 33,050, 33,000, which would be that round number again. Maybe not in one day, but in that direction. So that's what I'm looking for today.
Okay, so to put that into perspective, the Dow closed at 33,800 on Thursday. So Phillip is looking for what could be another 800-point slide in the Dow. So Chris, do you think Phil has it right or wrong? Do you think that we can get that far down in the Dow without any type of meaningful recovery?
Well, I don't really trade stocks, so I'm going to go with Phil is right on that one.
Well, you know what? That's a perfect segue into what our second challenge is, because as you said, Chris, you do not trade stocks, and we're going to make your life difficult and basically put you to some positions that you don't necessarily feel comfortable with. So, let's go ahead and mix things up and have some fun. Before we do that, I do want to say that, oftentimes, and in this type of market environment, we oftentimes may find ourselves in positions that we don't like at all or we don't feel comfortable with. So today we have forced market conditions because as a trader, I know that we don't just turn on our screens and randomly pick a trade like Chris and Phillip had done this morning. We wait for our setup and we trade when everything lines up. But, just for fun, we've all found ourselves in positions we don't want to be in. And that's exactly what's going to happen now. So, Phillip, can you go ahead and put on a trade for Chris? And Chris, you can talk about whether you like the trade, how you feel about it, and how you think you would manage the position.
I don't like the trade. I'll just start. I don't like it.
Okay. So the first trade that I am looking to give to Chris is.
Oh dear.
Well, actually, I just told him what I would do on Dow as well. But let me be nice. Let me be nice to you, Chris. I like you. So I'm going to share. Can you please see my screen? You can. Brilliant. Okay. Now this is going to be a little bit contrarian because of the recent US dollar strength. But this is dollar CAD, guys, in end of day time frame. And what I would like to do is I would like to short sell dollar CAD at 124 even. Okay, so I can put an order for it to be filled, or if you want me to do it, I can do it right now at market price. We are not too far away from it. It's about 25-30 points away.
Currencies are Chris's wheelhouse, so
I know. I'm because he does currencies, and obviously, if you're going with a US dollar strength, this would mean that this is continuously bullish. The way I'm seeing it is there is a 61.8 fib retracement. There is also a falling resistance trend line. We have different lows in weekly and monthly. So for me, this looks like an oversold bounce back in overall fairly significant prevailing downtrend. So I'm going to short it. And I would like to see how would Chris handle the same position, because obviously currencies are his kind of stronger point. So I'm just going to be nice to you.
Thank you, Phillip.
So that's it.
So go ahead. What do you think about this?
Yeah,
I think you need to share his screen.
I actually really like that. Yeah, and please do share my screen. I actually really like the idea of shorting dollar CAD because I know I said dollar strength. However, dollar CAD is one pair in particular that doesn't necessarily follow the indexes. It's also kind of counterbalanced by Canada. What I'm going to do to manage
I'm in this trade now. Just to clarify it, I went short. I went short dollar CAD, and I'm putting I'm in at 123.75. I'm putting a stop loss at 124 24.10. I'm going to be generous. I'm looking to take profit at 120. I'm getting blind. 122.35. 122.35.
This is Chris's trade now, so Chris can manage it as he sees fit.
Sorry.
Some
Well, I'm in it.
levels.
I'm in it as well.
All right, he's joining you.
Yeah, Philip, get out of my trade, man. Yeah, no, I mean, I like the idea of dollar CAD short. My only issue is timing. So what I'm going to do to manage this, because I have to take the trade Philip has given me, is I'm going to give a generous stop as well. I'm going to be even more generous than 24.10 because I feel like I need to be. I need to give the market a little bit of room here. I do like it, though. I do actually like that position because if you look as well, if you look on the daily time frame, you know, we've had a pretty solid rally for a little while now, and we've just gone ahead and taken out this high right here, this high of resistance. So, I mean, I'm anticipating a pullback anyway. And the fact that the stochastic RSI, if you look at that, is at 100%, sitting at 100%, you know, means that this is very much oversold. So I actually like that, and I'm in agreement with that, Philip. It's just a case of timing for me. So what I'm going to do is I'm going to use the high of this current candle.
Now. Don't wiggle out. They told us it has to be a market execution, so you're in it now.
That's true. It's a market trade right now.
I won't wiggle out. I'll take it. I'll take it. But what I'm going to do is I think I'm going to go a little bit further away on the stop. So I'm going to go, I'll call it 24. Let's go 24.25 there. So I'm going to give it an extra 15 pips there. Just because the other thing here is on this 15-minute time frame, I have a series of these T3 Tilsons that I use. And the purpose of this thick green one here is to break the market into a buy zone. So you can see here, buy zone at the top and sell zone below. So, you know, obviously anytime the market is looking, or rather anytime the market is above in the buy zone, I'm looking for buys. Anytime it's below, I'm looking for sells. So you can see this is a little bit of a challenge. It's not a trade that I necessarily would have taken on my own. Because of the fact that we are still in the buy zone and testing that support right there. But I'm going to take it. Like I say, I'm going to take it. And I'm going to put a stop at 24.25, like I say. And then what I'm going to do is I'm going to go for a simple. Do I have to go with Philip's?
No, you can. No, you can change the. It's your trade. You can change the target to what you want.
Okay, perfect. Cool. So what I'm going to do then is I'm going to get in at market like a champ, and then I'm going to go for a 1 to 1.5 risk to reward ratio. So I'm just going to calculate the risk here, 23.75. So we've got about 50 pips in risk. So I'm going to want to go for 75 pips in reward. So I'm going to look to take this down to about 2,300 even. So two things I'm doing to manage the trade Philip's given me. I'm getting out a little bit sooner than he's looking to get out, and I'm also giving a little bit more room in terms of the stop to give the market a little bit more room to wiggle. So there you go.
Very good. Very good. I think we have your levels, but. So, Chris, are you going to be as kind to Philip as he has to you and get into a trade that you actually like, or a trade that will be a challenge for him?
I'll be nice. I'll be nice. I don't know that I'll be that nice though, Philip. Let me think. I think I would like.
So you've got an Aussie Kiwi chart up.
Yeah, I'm looking at an Aussie Kiwi. I'm trying to decide between Euro Swiss and Aussie Kiwi. I think it's going to be one of those two that I'm going to throw his way.
Ah, the two most challenging currency pairs. Good luck, Philip.
I don't know what you're talking about, Kathy. Right. So, with Aussie Kiwi, I'm leaning more to. Can it be more than one trade, or does it have to be the one, Kathy?
It can be more than one. It's totally up to you.
While you guys are waiting for that idea, do you mind if I just update you on my trade here for gold?
Yeah, go
Can
ahead.
you share my screen, please? Okay, brilliant, guys. So this was nice and bullish drive lower out of that wedge. Textbook says, you can trade it in a couple of different ways. So let me you can see the P&L running at the bottom. I'm about $60 down on that dollar CAD, but it's a swing type trade, and I'm up 550, 520. It keeps changing and so on. I would be very quick to take partial profits now, if I was in a position to do so. The stop loss was initially up here, and it's moved now at break even. So stop is at break even. I'm feeling a little bit more relaxed about this, but I would normally, if I was actively trading this right now, I would be taking partial profits here just to pay myself a little bit, and then I would move the stop loss a little bit lower, just to ensure that if the market does go over, I'm walking away with some more money as well. I know we cannot do that right now, but I'm doing this for the educational purposes for your viewers, and hopefully they can understand how my mindset would work, because this is a scalp type trade. If I'm in the money, I don't want to give all of the unrealized profits unnecessarily back to the Mr. Market if I don't have to. But that's just a kind of how I would normally manage this trade. Okay, but I know we can't do that right now. So Chris, give me your best shot, man. Come on.
I'm ready. You ready? Let's do it.
Ready, buddies. Ready, buddy. Tell me.
By the way, did you just say Mr. Market?
Yeah, I call it Mr. You're gonna laugh now. When I was on a prop desk long time ago, there was a bunch of guys. There was about 47 of us, all trading futures, and there was one lady. She was sitting in a couple of desks away from me. And normally, if the markets go against you, or there's some spike or something, the guys would just slam the desk and say, "Your mama, Mr. Market," and that kind of stuff. They would swear and they would shake the screens and all sorts of different things. And this girl, she would just keep on whispering in the screen, and we never knew what she was saying. She was trading agricultural futures. She was trading agricultural kind of futures. And then one day, I remember there was something with, was it sugar or soy? I have no idea. There was something that she was trading, and she stood up and she said, I'm going to swear now. She said, "You bitch." She called the market. Yeah, she saw it as a female. We all saw it as another guy. We were battling against another guy. She saw it as another female. It really stuck with me. It's crazy how people see that.
That's funny.
Yeah.
It's crazy.
Anyway, I'm pretty sure you have lots of stories as well. Huh?
Hopefully with age, we've all gotten a lot less emotional about our trading.
Well, you start recognizing them. You start recognizing them, and they become your friends. But unless you drill a hole through your frontal lobe and take some of this gray mass out, you cannot be kind of unemotional when you're in a trade. It's exciting, Anyway, sorry, Philip, shut up. Go on, please.
All right, here we go, Philip. Let's get you into some terrible trades here. On Aussie Kiwi, I would like to go long. And on Euro Swiss, I'd like for you to go short, please.
Aussie.
Just don't do it with my account.
Sorry, Aussie Kiwi. You did what?
Long on. Yeah, long on Aussie
and what
Kiwi.
was the other one?
Euro Swiss.
Euro Swiss. Did I say long or short, Kathy?
Short. So basically he's long Aussie Kiwi around 107.86.
Okay.
And short Euro Swiss around 109.36.35.
Okay. Okay. So
I'm being a little nice there. Philip, because I'm Aussie Kiwi. I'm throwing you like my least favorite currency pair of all time, which is
Okay,
Aussie Kiwi.
we have that up, and then
But
Euro Swiss. I can tell you
I'm
some
being
horror
nice, giving you.
stories.
Well,
I
I'm
can
giving
tell
you
you
a
some.
chance to balance out that Aussie Kiwi trade with that Euro Swiss, because you're going short Euro Swiss, long Aussie Kiwi. So
I don't know if
there's
I
an
have.
opportunity to balance that out. That's all I'm going to say.
All right. So
Okay, cool. Here we go. So guys, here we go. Can you see my screen? Okay, brilliant. Gold is $6.50 away from my target. You sexy thing, you. Now, yeah, I know. Crazy.
Philip, the producers are going to put these trades in your account for you.
Excellent, excellent. Okay. So here we go. This is Aussie Kiwi. Let me just put my template on. Okay, cool. So you are long at this price here.
That's right. Yeah.
Okay. So yet again, I'm not really a currency trader. In particular, I wouldn't be trading these type of stuff anyway. But I'm just ignoring what it is, and I'm just looking at the chart. And this is a daily chart, okay? And what I'm doing at the moment is I'm just putting my stops and supports and resistances. So if I go and check this out in a daily time frame, I see this as a sideways consolidation, and I'm actually happy with that long setup as long as this area here stays. So this is where I okay, I'm gonna sorry, change the color of this. Come on, apologies. So that's my resistance, and that's my support. Just bear with me a second, and it'll all become clear. So this is my support point of interest. So I'm gonna make it blue. So this here. So that's the area of interest. So if I go into a 4-hourly, we have uptrend as well. Yeah, this is okay. I like this. I see this as multiple layers of evidence pointing to this area down here, 107.40. I'm seeing this as a sideways consolidation, which is expanding triangle from the price action point of view. Not the kind of easiest one to trade, but I would expect this to carry on moving higher. So I would keep my stop at 107, call it 107.30. I'll be generous. So I'll put my stop just below here, and I will keep this position open. Yet again, I might be completely wrong because I have no idea what the fundamentals are and what the kind of fundamental reasons might be for this currency pair. But from the chart point of view, as a swing type trade, I like this. I would take it. Not exactly at this point in time because it would have been better if it's giving me some sort of a trigger, a breakout above these sequence of the lower highs. So I would probably, if I had to trade it, I would trade it long above 1080 with a view to take profits up here towards 108.50. That's what I would do. I would keep it as it is as a swing type trade and just leave it open, because from the daily point of view, we are above 200 period moving average. We have the sequence of high lows. We have a breakout here. This is breakout and retest. I'm happy to stay in this.
All right,
I wouldn't change it.
So let's talk about Euro Swiss quickly, because we are starting to need to move to our third challenge.
Okay, cool. Euro Swiss, I can tell you some horror stories about Euro Swiss. Yet again, I was on the dealing desks when the Swiss bank did the naughty thing, and there was a carnage on that day. But here we go. So let me just do this. quickly. So Euro Swiss daily, this is bouncing off 200 period moving average. I'm seeing this as a falling resistance here. I would also use a basic fib from swing lows to swing high. We are bouncing off between 50 and 61.8, and I'm short here, am I?
Yes, you're short.
So if I had to be short, I would probably keep this open short as long as we stay below 109.60. So this area here would be my stop loss. If I had to trade it by myself, just for a reason, I would like to see a sell-off and loss of these lows down here for a continuation to the downside. So I would stay in this trade with a tight stop, potentially take profit at these lows at 108.70. So I could be completely wrong. I don't trade this stuff, but yeah, stay in the trade, stop at 109.60.
Great. Okay, so we are going to keep these trades open until the close of Monday session, or if the stops or targets get hit. So we'll update you on that. Right now, it seems like both Philip as well as Chris have winning, first challenge trades. Now, Philip's trade is in a bigger profit.
Yeah. Could I take profit on my gold, please?
Go ahead.
I'm going to close this 760. So happy to get out of that a little bit sooner than what I normally would, because we'll be talking again, and I don't want to be interrupting in and out. So happy with this trade. Looking for another one, and that another one for me at the moment is going to be long. This is going to be long Dow. You're gonna laugh now, but I'm gonna go long Dow, and I'll put the stop just below. This is ahead of the open, so I'll adjust it when Chris is talking.
I've actually Kathy, if I may, I've taken on a few additional positions.
Okay.
So I've shorted gold at 1777.58 with a stop loss at 1795 and a take profit at 1745. And I'm up about 16, 17 pips on that at the moment. And then Euro US dollar, I've also shorted now. So if I just show you Euro US dollar, here you go. You can see the trade here. Entry point on Euro US dollar was 1.1883 with a stop loss at 119.37 and a take profit at 118.13. So there's that trade right there.
We'll have our scorecard up after the battle, but it definitely seems like because gold moved a lot more at the earlier session, Philip has won the first challenge, but we still have challenge number 2 and 3.
Just to kind of recap on my reason for long Dow very quickly, if you don't mind sharing my screen. If you remember, I was looking for an oversold bounce back at the open and a gap fill from yesterday's close, and from a basic technical approach, I'm seeing this as a double bottom and potentially a breakout to the upside, and I'm seeing this as a nice little divergence, and I take these trades over and over and over again all day long. This is textbook. This is lovely stuff. So it's a counter trend, but it's logical because it's a gap fill before the open. So that's the logic behind it. You can see I'm already 350 up here. So what I would normally do, I would very quickly move the stop loss closer to the entry and be taking partial profits. But I'm going to leave it for now and pass it over to you. Sorry, just carry on. I'll manage it.
What's really interesting is that less participation can sometimes lead to more extended moves, which is what we're seeing in the markets today. So the clock is ticking, time is flying. We're now in our last block. It is Friday. We're heading into a new trading week with a UK rate decision, PMIs from Europe, retail sales from Australia, Canada, almost nothing from the US outside of personal income, personal spending. So with that in mind, we'd like to see what your best trades are for the coming week. Let's start with you, Chris.
Right. So I think it's appropriate to speak about the dollar, being that given everything you just said. So I'll start there. The dollar index. Okay, it looks like on the daily time frame we've got a beautiful King's Crown formation that's formed here, or sorry, a sub-crown formation. We're currently sitting after the most recent rally. We're currently sitting at, it looks like just shy of a 69.4% Fibonacci retracement level. And so if this holds, then that means that we're still technically at a 618. So I'd be very bearish on the dollar if this does in fact hold and we start to see a pullback at this point. Because what I'm anticipating that the market's doing right now is forming that right tip of the crown. So you have your left tip, your center tip, and then this would now be the right tip forming of the crown. And so I'd be looking to target 87.12 on this. And that makes sense because if I turn over to the pound dollar, okay, I'm actually longer term bullish on pound dollar. So, right now we're seeing the dollar strengthen. I'm taking advantage of that move in the market currently, but longer term, I am expecting that it'll start to weaken again. And so that would, of course, translate into strength on the dollar secondary pairs. So starting off with pound dollar, I've been very bullish on this for a long time now. I've been targeting 144.75. Reason I've been targeting 144.75 is because it's an unfulfilled 38.2% Fibonacci level. And the market has a tendency, Kathy and Philip, whenever we head back inside of the AB Fibonacci boundary, and we have less than a 38.2% retracement, the market has a tendency to go back and hit that retracement level. And so I'm anticipating, again, like I say, at the moment, I know I'm short on this, but longer term, I am actually anticipating that this will start to rally again. And I'm backed up by that with the stochastic RSI on the daily time frame as well. And so I do see a little bit more room to the downside here, possibly to around 37.75 thereabouts. And then I'm anticipating. So I'm looking for a buy. Long story short, I'm looking for a buy on pound dollar as potentially as we head into next week at around 137.75 thereabouts. And then I'm looking for that dollar weakness. So I'll be looking to trade the dollar weakness heading into the week. So of course, if I'm bearish on the dollar index, then I'm bullish on the dollar secondaries and bearish on the dollar primaries, which would make for a nice outcome on that dollar CAD trade, Philip.
So it looks like the pound dollar is a pending order that you're putting on, Chris, as opposed to a live market order.
Yeah, as far as for the next opportunity, yeah. So I'm live on this right now, shorting it. But what I'm saying is, for the week ahead, I'm anticipating that this will likely fall down to about this region, 37.75. And if you look, that's actually in line with my existing trade as well, because my target is at 37.77. So I'm like literally right on where I'm anticipating that this would start to find some bulls again. So it's not so much a pending order per se. It's more of I'm looking for a buying opportunity, i.e. a candlestick formation, the stochastic RSI lining up as it is at around 37.75. And I'm bullish on pound dollar all the way to 44.75.
Okay, so I have to ask, we've got the big Bank of England rate decision next week. You're going to keep this pending order on into the BOE. I know you don't really watch fundamentals, so maybe that doesn't matter, but we want to make clear that we're going into big event risk.
Yes. It's a big event risk, but I would agree to disagree there, Kathy, a little bit, because short of Bank of England changing course from what they've done for the past, God knows how many years now at this point, I don't really foresee that much of a shock to the market. So in that case, I'm a firm believer, and just generally speaking, I'm a firm believer that technicals are king. I'll just add one little caveat here. If we blow right through 37.75 and it just keeps on going, that'll be because at this point, that'll be that we're heading back to this unfulfilled sub 38.2% at 34.11. So that's why I say I'm really looking for the formation. I'm looking for the justification to get in at around 37.75. If I don't get that justification, though, then I'd still be looking to short this. But I do think around 37.75, we should start to see this rally.
Okay, sounds good. Philip, what are you giving us for the coming week?
Sorry, yeah, I was looking actually at a couple of things there as well, from the sterling, from cable point of view as well, and I was in a camp which believed that sterling dollar could possibly end up a year at 149. So because of the current changes, that doesn't look as likely, but I have a bullish bias in relation to sterling against the dollar. I'm going to leave that for now. It needs to break to the upside, needs to go back higher in order for me to kind of engage with it again. Longer term position, it's probably going to be a gold again. This area here, this shaded area here, is definitely of interest for me because that's a 61.8 fib retracement of this swing low to this swing high. You know this position that I took in Dow Jones? I took identical one in gold at the breakout of this area here because you see the same divergence here. So it's the same setup, double bottom, higher low. Stochastics, unemotional, stupid, dumb mathematical formula. This is filled with emotion, greed, and fear, and testosterone mostly. It's creating a higher low, and off it goes higher. So I took this trade, and this was a longer-term daily falling resistance trend line here as well, and a breakout and so on. So I'm bullish gold. I was bullish gold, and I'm still bullish gold. I would look to find the reason to get in this trade long. I'm not getting it from a daily candle because this is really ugly looking shooting star, or there's like a pin bar here. You can't really see it from my drawings. But if I see a big reversal here, a morning star reversal, bullish engulfing like this, a doji, a bullish hammer forming here, I would wait for something like that, assuming that it doesn't dip below 1755. An end of day or a weekly close below 1755 would definitely spook me, and I would walk away from. I wouldn't trigger this trade. But if I see a reversal of some sort later on today, or possibly even next week, I would likely get in as close to 1760, 1770 because of that 61.8. Fib retracement, and I would be looking for a decent retracement to the upside towards this zone up here, 1840, possibly even 1850, 1860. So a tight stop below, about $10, $15 in price stop, with a view to potentially take profit at 1840, 1855 on the upside. But if I get a confirmation to get in, so that's subject to the confirmation. I know it's difficult to kind of formulate that in an order because you're going to have these orders kind of running, but that's basically what it is. So long gold.
Okay, so it looks like Philip's given us a gold trade and Chris has given us a pound-dollar trade, both to look for entries. We will update you on how those work out and if we get into those trades as the week progresses. Now, in terms of challenge 2, Dollar CAD is hurting both of our traders. So at least they're both in the trade. Aussie, Kiwi, Euro, Swiss is hurting Philip, but overall, Philip is winning by far because that gold trade gave us some really nice profits. It's been a really great session, guys, and we've run over time. I do want to say, Philip, Christopher, thank you so much for joining us, and thank you, our viewers at home. You really got a chance to see how these two seasoned traders take positions in real time, and how they get in and out of undesirable positions, how they talk through it, the strategies and thinking behind every trade. We're going to keep you updated. Maybe next time we'll have a cooking challenge because I hear there's some real talent there. But for the time being, thank you so much. This is the Trading Battle, proudly sponsored by ACAP. And if you have questions, we'll try to get to them in the videos afterwards. We've run out of time today. So thank you for tuning in, and we will see you next time.
Thank you for the opportunity, and stay safe and happy trading. Bye for now.